Ladies and gentlemen, it's Adrian's Dunchik CMT Charter Market Ignition Crypto Burp. Welcome to the 100K show, everybody. What a ride. Shit. 99K right now. I'm pretty curious if we're gonna literally time it so well that we're gonna see 100K just like we speak. It would be crazy, wouldn't it? What a good timing to be alive. What a good time to be alive. What a good change when and what a good excitement when every single thing that we debated for such a long time is actually coming true. When the past 2 years have played out textbook like incredible clockwork, Swiss precision, German precision, Polish vodka, everything is coming all together and shit. Next months are gonna be crazy, everybody. Let me know, raise your hands. Who is here? Knock on the door. 99 problems, but 100K and one, that's for fucking sure. Everybody, listen, I'm so excited. I'm so pumped. We're gonna have a very good session. I'm energized. I've just drunk my 55th coffee today. Incredible meetings all the way through. Even more interestingly, I had a session earlier today for the first time ever, which was incredibly interesting experience. I had a session with the high school people. I was invited to come and navigate them through the crypto space in the private kind of like a school. Never did I, imagine before that I would actually do anything like that. And here we are, close to 100K, with so much excitement. Market not being even halfway through for what's ahead. Jesus Christ, I feel like Andrew Tate right now. I should probably just rip off the entire fucking shirt and just, it is what it is. I'm super excited, super stoked. Everybody, if you can hear me, see me well, please drop a note, leave a mark that you hear, that you exist. Let me know where you're from. Let me know where you're sitting right now. How are you feeling about 100K coming precisely, or actually unprecisely anytime soon? It may be happening in the next 5 minutes, may happen tomorrow, may happen in an hour, may happen next 15 minutes. We'll see. All we know, even though we don't know when it's going to happen, we know it will happen, right? Of course, we don't know. We cannot predict the future, but, well, ultimately, guess what? It actually hit 100K earlier today on the CME futures on the open. So here we are, 100K past 100K on some exchanges. We're adding another digit. Historical moment, everybody. Historical moment. Just the first time Bitcoin broke over $100 in 2013. First time Bitcoin broke $1,000 soon after. First time Bitcoin broke $10,000. We love those special round numbers. We treat them special, even though they are numbers like any other. We treat them special. They're easy to remember, and because of that, we anchor to them more. And because of that, we often stack up our orders and use the behavioral psychology, or actually behavioral psychology uses us typically against our favors, So all in all, there is so much excitement, so many good things happening. Let's get a quick review of the market and see where we are, while actually we are knocking on the 99,000 door. Let me wrap it right away here. Dow Jones Industrials up 0.76%, 44.2K on the points. Slight bounce off 20-day average. All the averages pointing out bullish. Bullish short term, bullish medium term, bullish long term. S&P 500 knocking on 6,000 again. I don't like really those exhaustion gaps that happen. There's island reversal type of a chart pattern on the top, and the very, that's marked as the 6,000 peak right there. I don't really like it too much technically, right? Because until it's actually faded until it's invalidated, it's broken through to the upside. It poses a substantial risk because this is a reversal pattern quite often, more often than not. Moving along further, the consumer discretionary is right there. Even if we are to open one of my favorite charts, let me open this real quick. We're gonna bring this. Let me just find it. Give me that. Give me that. Give me that. There you go. Here we are. XLY versus XLP, the relative strength chart of one security against another, showing the not the absolute performance, but the actual, comparative analysis, right? Actual relative performance. The trend is up because we keep climbing higher. As simple as that. Trend is rising, even though it's been actually stagnant for quite a long time. We definitely didn't hold through, those areas below 2.3. We kind of like had a proper nosedive in August when everything plunged. That was on the risk side. However, more importantly, we were 267 in the June. Or actually, December last year, the peak was 263, which means we are higher, which means we made a new high, and we made series of lows, equal lows, and a little bit of a lower low, still constituting to the higher highs of 173.823, 192.9, and 215 in August, right? So this tells me that relatively, while consumer discretionary actually is moving along, consumer discretionary is the things that we choose over the, the things that we like over the things that we need, right? Things that we like over the things that we need. So as a matter of fact, when you look at it, you're literally looking at the trend that is picking up right now, the new highs in this direction, that the investors are more risk-seeking on average than they were, for instance, a year ago, and than they were 2 years ago. That means there is this rising tendency. And if this is rising tendency, well, guess what? Those tendencies tend to be maintained, tend to retain over the time more often than not. Right. So this gives us a little bit of the context. Here we are as well. If I actually just bring it back and reload, 0.07 on the yield curve chart, right? The 10 years minus 2 years, the treasury yield note against the 2 years actually is close to break even, is close to zero. Means we are healing, although historically it always brought often massive series of declines, to the extent of negative 1.06 in mid 23. We typically preceded this with significant recessions, just like we did, every single time in 2007 here, 19.19 on negative 0.54, negative 2000, right? So the dot-com bubble, 1989, the start of the entire market rise, minus 0.043, and late 70s as well, minus 234. All in all, this shouts, this screams recession. We're going to see how the market discounts it actually, because the market is exactly what puts the economy into recession or expansion. So the markets can also have enough power and steam to actually just take it away and rip it to the upside. So we'll see. We'll see, ladies and gentlemen. So what else? If we are to just bring it back here just a little bit for more context, here we are. The bond prices ever since Donald Trump got elected right there in November start, it actually plunged 11.9 down to 11.6, 11.5. No, not 11.5, 11.6. So 11.6, 38, minus 15%, 0.15%. And the TNX, the 10-year T-note yield, like I said, is actually 44.08 on the TNX side. The CRB, Strong Energy, was skewed. Gold is right there, retesting the key resistance right now, contributed and constituted of the moving averages, 50-day moving average that is actually shifting the momentum a little bit, weakening the momentum after the bearish crossover on the short-term side. So the gold is in a short-term correction, is actually right now in the key mean reversion resistance, just like we spoke about it on the previous show, I think. Silver right there, slower, more of a laggard against gold. So relatively gold has been a better choice profitably rather than silver. Although all in all, the metals are there. And here we are, almost all cryptos in green, right? Except for a couple of cases like Ethereum, which is why many people hate Ethereum these days, like BSV, well, not surprised there, and Monero, so the Dino coins. Dollar is getting strong and rampant. almost 108 points right there, tagged earlier today. The dollar ETF actually, can be often preceding to tell us what's happening in the future, because it drives the demand on the dollar by the dollar ETF purchase interest. Now, spiking over 30.25 right there, marking point 30.35 right now as we speak, 0.6% up. Now, all the moving averages are rising nicely, strongly. So dollar is getting stronger. Commodities are getting stronger. Cryptos are getting stronger. Stocks are getting stronger. So it's everything rally. It's everything bull rally. And here we are, Bitcoin. Jesus, let's pull it through. I mean, listen, if everybody on the stream on the show just buys a bit of Bitcoin, like just buy 10 million. Okay, let's agree to buy 10 million each, and perhaps we're gonna make a change. And if we make a change, well, we're gonna be rewarded for it, because just maybe, we're gonna witness the history of slicing through 100K like it's nothing. At the same time, I'd say that we need to be careful, and I'm gonna give you a little bit of a valuable tip, I think, on how we can utilize the moving averages in our best favors, right? So if I were to show you that real quick, let me show you that. One sec. Let me get you that. There we go. All right. So why moving averages work in trading, right? Because you see me using moving averages a lot, and it's actually the entire psychology behind the markets, right, if you will. So it's not only the trading part, it's actually the entire psychology aspects to it. And all in all, starting from the left side, where the focus is, we're talking about the anchoring effect. Just like I said, the moving averages and the technical analysis and all the indicators, they do work because we tend to anchor to some numbers more than the others, right? There's been an experiment back the other day where they tested social phenomenon of guessing the prices of a bottle of wine between different generations of the younger people and the older people, and the people with the of the older generation were basically pricing the same bottle of wine, more expensively and higher, just because they were older, right? Because they were asked to refer to their own numbers, to their own social security numbers, and so on, that were kind of like glued and correlated with the age and with the birth date. And guess what? They priced the same bottle of wine higher than the younger people, than the younger generation, even though it's the same bottle of wine. So the same thing is happening to Bitcoin right now. Some people value it differently, and we value it differently because we anchor to same levels, and we think of them magically, as in that 100K is some special, magical, not random level that is actually stronger and better and superior to any other, while in reality, it's just a number. It's the same number like anything else. We crave for patterns. Like if we go and have a focus here, we crave the patterns, even though they do not necessarily even exist. We often make them exist, right? Our thoughts materialize right in front of ourselves. There's this thought priming where even without realizing, we are actually just, like I said, executing our ideas. And even though there's no essence, there's no special force, there's no special God's hand, on 100K to sell off, for instance, it may happen because people are going to fear that 100K is a special number, and they're going to sell before that, right, basically, or right above it, or right around it. So that's why there's a lot of order clustering around those levels, right? Such as this point actually claims. So that with limit orders expiring as they get filled, the initial opposing force is actually created at the price barrier. So the previous support or resistance. So order clustering is exactly why the self-fulfilling prophecy works, and while the trends reverse or stop temporarily at some key resistance or support levels. So all in all, besides there's a lot of randomness and the statistics that the averages work and play the role of statistical of a mere statistical average, arithmetical average. If taken of a large sample enough, it can actually serve as a meaningful source of expected value, right? If you take a simple average out of 5,000 days, it's going to tell you something, right? And if it moves in one direction, this means that on average you're making money if you're in, or losing money if you're not in, or losing the opportunity. All right, so moving further along, right? and why we use all those different sorts of moving averages. Now, here we are. Hopefully, we're going to be able to see the entire screen right here. But what's relevant is that we are here close to 100K, 99.326. Jesus. Let's pull it off. Let's do it, guys. Let's do it. Let's do it, chat. 83 on 82 on the RSI side. The relative strength index is not the same as relative strength, because relative strength index compares the price appreciation against its own values, right, over a certain period of time. So it tells you and compares the up days versus the down days. It shows the relative strength, but it's an index. It's not a relative strength as in comparison of two different independent securities, one against another. But there is this tendency of the market, if you will, right? The tendency of the market to go up, right? So how do I know that? Well, just take a look, right? This line is a 50-day average of the RSI. This is an RSI basically taken out of the last 14 days. Right now, at 82 out of 100, now telling us that there's 82%, sort of like a momentum, if you will. 82% pushing force, or the throttle is on, while 65 right now on average, which means we are far above the average. We're 85 against 65. That's quite a decent change, quite a decent appreciation. That's actually pulling this average higher. But the entirety of the ascents means that, on average, the RSI, the momentum is building up rather than like exhausting and weakening. And here's the volatility measured as the ATR. ATR is basically, like I said, the widest spread within some benchmark date, as in 14 days by default, between the highs and the lows and the widest point. So highs and the lows, this may be an open and close, and and the low and a high in different configurations of that. Doesn't matter. The widest spread over 14 days is actually the ATR. That's the measure of risk. And on average, here the volatility is picking up. It's after just escaping a little bit of a valley right here, except that it's still fresh, it's still new. We see a massive spike in the volatility for what it was a month ago, right? At 1900, we are actually double on that. So we've increased the 100% volatility right there. The risk on Bitcoin increased 100%, which means it's double as volatile as it was 1 month ago. Means you can lose twice much more money than you could before. So all in all, you can use and apply technical analysis on those indicators because, well, guess what? They are price derivatives, right? They are derived from the prices. And if that's the case, you can actually use technical analysis and use it and all lay it over the indicators as well. All right, 99.43.1. We are less than 0.6% away from 100K. We're almost there. And to me, it looks like it really wants to go there. And if that is the case, we're going to celebrate. We're going to have a special celebration, everybody. Oh, man. It's looking really good. I mean, I have no idea what's going to happen, of course. No one knows that. Though it's looking really good. My baseline expectation was that people would fear basically of 100K. So I wouldn't be surprised if we see some slide through towards like 100 and 105. Just see a massive spread and slippage, if you will, to the upside, maybe 110, and then kind of like a massive reduction. I have no idea if it happens. I wouldn't be surprised if people decide to take some profits basically around those magical numbers for all the self-fulfilling reasons that I mentioned. Even though I don't have to believe it has to do anything with it, people may do. And if people do, they are the voice of the market, not I am. So we don't need the fibs. But all in all, simple trend lines, right? They work because we make them work. They're indicative. We use it for reference, for benchmark, to know whether it's above or below. And hence it works because we glue around it. We anchor around the benchmark, the benchmarks right there. And breakout retest right there, massive push, 67 all the way, to 99 to almost 100K in just a mere, which is 47% in just a mere of less than under 3 weeks. Pretty crazy. On the trade side, I'm running a small position. I mean, most of my portfolio is basically buy and hold. Ever since 2023, I made some purchases. Many of the tweets you can actually just take a look at. And on my Twitter, you can look it up anytime, all right? Because all of them were public. I was contributing every major every major dip, that happened basically ever since we broke the 20K Like this pullback around 20K promised 20.3. I think that was the purchase. It's flying online. Now this area 26 September, which is typically the slowest month, the worst month on the record. So I would buy in 26,500 if I'm not mistaken. That thing, I think around 30K or 40K might have contributed there. I don't remember. You can literally just go ahead and check all the position sizes and all the trades I took, back then last year. In Twitter, it's public. I made it public. Go ahead and search. Have fun. Though all in all, each and every single pullback like this at around 60K, it was also kind of like a fruitful operation to add to the strategic long-term buy and hold, which makes me think that since it's acted so well, since it's checked out so well, textbook play so far, there's a lot of chance to expect that it may actually top out anytime in the next 6 to 9 months. And if that is the case, we have a wild ride ahead, vertical, but we don't have much time left, horizontal. Let me know real quick, everybody, if you think we're gonna actually just break 100K today on the show. Let me know. Drop a comment. Drop your thoughts. Let me know what you think. Actually, it's getting warm. There you go. Pulling of Andrew Tate. All right. Where are we? Yeah, there you go. So this is my trend system, my trend following system based on the volatility, ATR adjusted, basically adjust to the upside, based, giving you a little bit more space not to get knocked out and stopped out, on the upside, and at the same time reduces the downside in the bear markets, right? That's how it works, the multiplier. Right now, the key support is basically 93,849, and the daily trailer is 9129. So anywhere between those levels is basically a strong layer of support, because they are volatility based levels. The closest, the nearest point of reference for me is 93.9, or 94 if you will, because of round numbers, and another one is 90, right? So 94 and 90 is giving me two strong potential supports, not because I say so, but they are measured based on the average volatility, right? So the average volatility, or actually not the average volatility, but actual volatility, being 3,800 right now, or 3,500, just like we saw. This tells me that basically the multiplier of the 3,300 to the downside, or 3,500 to the downside, by what was it right now? For the bull multiplier, like I said, it's times 3. For the bear multiplier, it's 1.8. So in the bear market, it actually flips to 1.8. So that keeps in conservates. I don't know the word. Just secures, protects the portfolio against severe losses. So this gives me the points of reference. This gives me key resistance, key support. Resistance in the bear time, the support in the bull time. So right now, if I were to see any massive reduction anywhere, any reason soon, basically you can expect the market to bounce, give a proper bounce based on the volatility, because this is the average volatility. We would even exceed it on a 12 daily basis, on the 12-hour basis, and reach the daily basis. And if that is the case, like I said, the daily basis towards 3x from 99 all the way down to 90, which makes of course sense. 3 times 3, 9. Okay, slide right there. It's looking pretty good. And it's looking pretty good because there's a strong trend. This trend is actually escaped this 260, kind of like a corrective tide. It's actually broken, and when it's broken, it's going vertical, right? So it's like this. It's like a parabolic move. And if this is a parabolic move, basically, trying to oppose it, trying to short this rally is basically a suicidal rally. So it's suicidal to your portfolio. I wouldn't ever recommend it. And if we are to go to a little bit more details on a short-term basis, the high band is 94.5, 97.5, 94.5, 97.5. And the low band, if we are to be a little bit updated, is 83.9 and 87. I would assume 83.9 and 87. and 87, right? So what it tells me, everybody, is that based on the volatility, it works a little bit like Bollinger Bands, except that it's actually measured against the custom baseline that we have, right? The one that is invisible right here. I'm just gonna lay it. So it's measured against the baseline, and it's also measured so that it actually just gives you the volatility measures, you know, above and below this baseline. And this baseline is skewed more towards the recent data rather than just a simple arithmetic average, just the way it is in the Bollinger Band. So it's more sensitive, it's more correspondent, it's more actual, it's basically faster, it's more accurate, right? So what it tells me is that this area between 94.5 and 87 is basically the average expected volatility. This is the average movement. If Bitcoin were to move sideways and not stop trending, we would see Bitcoin basically move within this range of 87 through 94.5 approximately, so $7,000-8,000 most of the time, right? If we take it to the extremes, it's 97 basically taken down to 84 approximately, so it actually gives you 13,000 range, and 13,000 range, takes it basically to there you go, and 13,000 range is basically 15%. Well, didn't even have to calculate it, right? Taken from 100K or so. So all in all, and we are above the average volatility. We are over it. We are better than average volatility. We are better than the volatility limitations. There's this continuous pressure for Bitcoin to go higher and higher, right? It started off as ever with this consistent pursue higher, right? It actually followed through with the 80K right there push, not only after the bull market was created, but also after this massive slide was presented from 80K to 90K. What a significant push it was. Almost 12% in one day it was, right? And those types of movements are exactly what takes us and rips us off to the trades, to the trends, right? Those persistent movements that just go on and on and on and on and on, more vertical, faster, deeper, more aggressively, to the upside or to the downside. All right. So what it tells me is that we are better than average. We are continuing to press strongly against the Bitcoin volatility to the upside. The bulls are winning, and if the bulls are winning, the only people who are salty, the only people who are just not really happy, the only people who are they're shit posting and just being miserable are probably the people who bet on the opposite side, because who on earth there's shorting 100K people? I mean, there are going to be people who are going to sell it, and ultimately, most likely, we're going to see some reduction and some retracement towards like 70, 80K or so, and that would be probably the last buy moment for those who got so late, because ultimately it's not even close to what we were before. Because if I show you the Google Trends, right, and if I type in Bitcoin, let me show this to you real quick. And if I show you the last 5 years, and if I show you the entire world, all right, what it tells me is that right now, as we speak, the interest has peaked at 60, what was it? 68%, or now it's 51%, basically, of what it was in 21, which means that we are right there at the verge of breaking $100,000 with only 5 out of 10 people, or 6 out of 10 people, basically, that were interested in Bitcoin back in 21, which is crazy, right? Which is crazy. 50K sell wall, Rickman, man, good to see you. 50K sell wall. Well, the order books have this so-called kind of like a spoofing effect that anyone with a large stake can basically create this illusion of the resistance, because they're going to place an order, and guess what? You turn your side left and right, you come back, and there is no resistance anymore. People take out, there is a proper way to engineer the order book to an extent that it actually just spoofs and shows you some fake walls, but in reality they are either market makers, well, not necessarily in the case of Bitcoin, right, but some other projects. Although in case of Bitcoin, there is a proper psychology behind it, right? I mean, if you want people fear, You just place right above a strong order for the sell side, and it doesn't have to be real. I mean, someone can just reduce it, all of a sudden. It can disappear, it can reappear. Many things can happen. I mean, it's temporary, right? Still, I mean, of course, it's good to track it. And maybe you're right, Rick. Maybe it's not going to happen today. Still, it's taken us. You and I remember you and I. We had discussion when Bitcoin was basically, what was it? 20,000, $25,000, $30,000. Yeah. So regardless of those strong sell walls that people think they'll never be broken, are actually 3x higher right now. So so that's how it works, right? If it exists, it's only temporary effect. And if we are to give you numbers, see, those are not my opinions. I'm giving you numbers, right, everybody? They are not opinions. The numbers is that in NUPL, the net unrealized profit and loss, so the kind of like a measure of overheat in the market, is at 63%. It's 0.63. If you will, of course, measure it in the percentage terms to some approximation terms. But all in all, is it measures, the net unrealized profit, how much outstanding profit there is in the market, how much market bloat it is. And it tells you that it's not even in the extremes. It's not even where it was in the peak time in 2017, right? Where the market bloat was basically close to 0.8, or back in the day, even, higher, 0.82. Right there. So it continues to diminish, of course, right? So we don't know if it's going to reach, 0.7, 0.8 this time. Still at 0.63, we are close to $100,000, and we are still lower on the profitability side, than let's take a look then, but it's 0.63, while the actual peak so far, the previous peak and the all-time highs, early this year in 74K or 71K, was pretty higher. So we are higher in the price and lower in the NUPL side. So there's basically means that a lot of people got left behind. A lot of people got left behind. Another way to measure the market profitability and the market blows is the MVRV, the market value realized value. So it compares the market capitalization, how much money there actually is in the market, against the summary of all the transactions size and value. Right? So it tells you that right now the current value is basically 328 expressed in a z-score, right? Z-score is the number of the standard deviations. So it's 3.28 standard deviations against the mean of the market values ratio to realized value, right? So it tells you that there is 3.2x more money than the actual blockchain would show, okay, as a summary instead of all the transactions together. And well, historically, to trigger the peak warning, every single peak happened when MVRV was above 7, right? Or even more so, above 7.13. All right. So 7.13, divided by 328 is more than 2x, right? Is more than 2x, basically. To be more accurate, 713 against 328. Let's actually do it. 713 to 38 gives us almost 3x. And this 3x multiplied by the current price, basically, by the current price of $100,000. Well, simple maths is it tells you that you would just trigger the peak warning at $300,000 just right now. Now, I have no idea if that's going to happen. I have not a single piece of clue to know, whether or not we're going to see those big wild numbers. But I don't know, man. I mean, we're 100K. Only half of the people that were 21, there are interested. I don't see anybody talking about it. I don't see people getting excited about it. Some shit coins, of course, are being flipped right now on a daily basis, which attracts a lot of TikTokers, which is a start of this whole thing. Though we are so far from the peak. It's not even halfway through. Like, hear me out. It's not my opinion. The numbers are not halfway through of what they were for the entire past of Bitcoin to trigger any slightest peak warning. And even after they had triggered the peak warning, the market continued to rally for a month or two, right? Very often bringing another 5 decades of percentage, for instance. So we're not even halfway through. That's the conclusion. That's the conclusion, everybody. And then it's crazy. And the reason for that is also not only because the retail interest is so low, but also because the market has got so much institutionalized with more than $500 billion, $536.6 billion of cumulative spot Bitcoin ETF volume. All right, out of which basically right now as we speak, the spot against the futures is 92.77%. So 92.77% is for the long-term hold because you hold spot for long-term, right? So 92.77 ETFs in the Bitcoin market are basically spot oriented. So those are the institutions set up for the long term. They are not going to sell for short-term profits. All right. So this tells you something. The inflows right there per the 20th, so 2 days ago, are actually 0.77 billion, on the positive side. Even if we take this one, let's take it. Are we gonna see it expand? Just it's pretty wild. I mean, there's this massive appreciation of the ETFs just over the last 2 weeks. Multiplying, just the holds actually on the AUM side. The IB, the BlackRock iShares BTC ETF fund is 43, almost 0.7 billion, right? Measured as of 22nd of November, measured as of today. All right, so 44 billion close to the Fidelity Bitcoin Spot ETF, 22.7 billion. Grayscale BTC 20.85, and there's the ARC BTC, of course, and the license. I think it was BitB right there. So shit, man. I mean, we are crazy. We're crazy. It's looking pretty sharp, everybody. Yeah, let me know in the comments how you're feeling about it. I mean, where the market is heading, you think? And I'm also gonna give a quick check on the shitcoins, on the shitcoins, on the good projects. Let's actually take a couple of chart requests. So drop a ticker, and I'm gonna try to I'm gonna take 2 tickers and basically gonna give you a quick heads up for what's in the cards, what's in the charts. In the meantime, there's been an interest on the ETH side, on the Lake side, D side, on the SUI, Credit. Yeah, let's take it from there. So for instance, Ethereum. All right. Of course, it's been lagging significantly. It's been lagging so strongly against Bitcoin. And it doesn't, we don't even have to search too far, because if we go to CMC, CoinMarketCap basically, and take Bitcoin against Ethereum, what we're gonna see is compare with Ethereum, and we want to get it done over the last year. Then the discrepancy between that is ridiculous, right? Bitcoin over the last year is 163% up. Ethereum over the last year is 60% up. So it's more than 100 percentage points difference between Bitcoin and Ethereum. That's such a strong lag, even though for most of the time it's been correlation, right? But all in all, if we are really strong here about Bitcoin, we shouldn't be so strong about Ethereum just yet. Not because I say so, but because the numbers are not there, right? I'm commenting on the facts. And the facts are that the difference is exceptionally big. It's 105 percentage points and even over that, right? So Ethereum is looking good and sharp, although it's way weaker than Bitcoin. And our job to make money in this market is to pick the stronger cases, not the weaker ones, all right? Geez, all right, you wanted to see the meme coins, right? You wanted to see the meme coins. Let me show you the meme coin. Let's go for Peanut. Let's go for ARK. Let's go for Bong. All right. Let's go for Whiff, for Popcat. Just a quick shitcoin review. All right. What's happening? For our chart, Peanut is actually down as we speak from the peak. It's 54%, 55% drop so far. The bearish correction goes on in a massive slide for Peanut, 0.17 right now as we speak, and the trends are moving downwards, right? So massive rally, of course. However, it's cooling off, it's cooling down. There's no significant floor, I should say, right now anywhere for the market to drop, maybe except for, well, if I were to give you a technical support, I would search in either 0.93 or 0.55 simple, because of the polarity change principle. Basically what used to be a previous support now becomes a resistance, or the other way around. What used to be a previous resistance actually, once broken, becomes a support. Not because I say so, because those are the rules. Markets don't have the rules, but it's just because the people traders materialize their faults. There's this fault priming, and that's how it works. On the act side, on the act against the USDT, similar situation, right? So they are the ones that were listed on Binance. Similar situation, same case. The bearish retracement goes on. There's been the strongest support right there at 0.57. We are now at 0.45, down actually from the peak. Nice. We don't want the emojis. Down from the peak of 55%, almost approximately 54%. With the key resistance point 59, 0.60, if you will, because of this random number, those round numbers. So it tells you that it only gets back to the bull mode if it actually breaks through those regions, right? And there's of course all the entire alignment with like I said, the polarity change principle, right? So the broken support right there becomes a resistance soon after. And on this side, we're looking at Bong, right, which has established this new all-time high, and it's trading. It's actually moving. Let's take it down to the daily chart. It's actually moving right now after some local peak reduction from the RSI side. The momentum is weakening. There is all those different sorts of series of the bearish momentum divergence, if you will, that a trend keeps rising, but it's slowing down on momentum, basically meaning that there are fewer and fewer players, less and less up days. So the trend is weakening. The key support is ODOs and 427. Right, the trend is picking up lately after this massive breakout that happened, significant rally. Although it's cooling off, it seems. It doesn't mean it's gonna reverse imminently, although it's cooling off, that's for sure. And on the WIF side, so the dog with hat, the previous thoughts, right? The previous thoughts were basically, first of all, we are below the 50-day average, which means that we are on a medium-term basis worse than average. On the how much steam there is in the market. It's not good for the upward trends. Let's face it. Key support is 3.13. There's a decent recency, kind of like a biased moving average, the 200-day BPRO trend line crossing over to 200-day flat simple moving average, basically giving you a little bit more recency impact, from this massive push from 1.8 to almost 9. So, but it's right now on the edge. On the bullish side, though, it's PopCat. PopCat is on the bullish side. There's this all series of supports. I think the dotted one is the dotted pattern curve is actually the 50-day moving average. This is a 200-day BPRO trend line. This is a 200-day simple moving average. They often work because of all the set reasons, work as support and resistance. Here in this case, support 0.8 for the round numbers, and the support of the trend line 0.12, 0.15, if you will, make it so. And 0.26 is actually indicated by the volatility, like I said, indicators. And there is this bearish divergence that continues to shape, right? The bearish divergence, it often precedes significant reversals, at least, on a short to medium term basis. It doesn't mean that, it's the end and it's finishing. It means that there is just overextension. It also means that it can run and rally further along. If we take this, and if we remove all the drawings, what we're gonna land here is basically the SUI, right? Strong push. Key support is maintained right now, 3.19. I would make it and round it up to 320. Similar situation, that the momentum is weakening, although the price has risen significantly. This doesn't really give you too much optimism, although it can remain like that, for many days still and continue higher, right? And that things may improve because, I don't know, RSI is just going to push higher because of the strong price appreciation. Similar situation to what happened, right, before this 200-day crossover against the 200-day simple moving average SMA. So it's just going on, right? And the previous resistance becomes a support. So after 3.2 is lost, I would expect support out of 2.5, for instance, right? That's also, until then, probably happens. We're going to see the 200-day appreciation, and 2.3 is likely going to give us another floor. Quick shout out to our partners at Credify, by the way, that are defending the floor so far in terms of the community. The traders are defending the floor. They seem to appreciate the value of Credify to an extent that they're not letting the floor go. So there is some sense in it, basically, on how the floor is defended at 0.013, right? And of course, they are very strong player in the RWA scene, bridging the Web2 and Web3 capitals, for tokenized bonds and NFT bonds, and such a cool concept of basically, on the credit side, just making it more efficient and more fluent, bridging the Web2 Web3 capital. Key resistance 0.26, 0.026, key support 0.013. So it's quite a space to the range. And as long as we move inside of this range, the sideways pattern continues. The average is actually moving down, so it means there's some downsloping effect. Now, even though we are in the ranging and kind of like trending down, it still depreciates accounts for the last 200 days, right there. And key resistance 0.017 is maintained so far, and key support is right there. So now the polarity change principle works. Not once, not twice, not thrice, but so many more folds on top of it. And besides, 94. All right, so this looks extreme greed. First time in a very long while, right? Beautiful chart. What a beautiful chart that is. That may mean that, we are close to some sort of like a correction, because the market is obviously overextended, overheated. It doesn't mean that it's going to stop there for good. If anything, we're due for some short-term mild correction. Maybe it's going to, like I said, maybe it's going to take 10, 15%, but just in this case at 100K, remember that 10% correction means 10K slice. 20% correction means $20,000 slice per Bitcoin, all right? So, just take it with a grain of salt, of course, because the markets can rally when there's a lot of steam in the market, and this sentiment is a steam, and there's a lot of steam in the market can really rally on for a long time, for days, weeks, and months. I don't know what's going to be this time, of course, because I have no idea. I have no right to know that what the future holds. Still, based on the numbers, we are maybe due for some short, mild correction anytime soon. If it's going to happen at 100,000, if it's going to happen at 150,000 or 110 or 107.5, no one knows that, right? Although it doesn't have to surge too far, to, like, if we rallied in the 15, 16, 17 days, from $60,000 all the way to 100 almost, or 99.5, then what are the chances that it's actually going to touch or just do, over 100K? If you are moving this long and you are here basically right before the finish line, and someone asks you if you've run so long, and are you going to manage to pull through just one additional step? I'd say sure. And that's likely what's going to be the effect and come out of that. And everybody, before I actually run, everybody, I've been talking for so long. I want to invite everybody, because 3 days from now, on Monday, we're actually kicking off the 6th edition of Free Trading Congress, right? It's a virtual Congress, virtual trade camp, basically. It's an online event in less than 3 days, 2 hours, 2 days and 6 hours, where you can just join basically for free and participate in this virtual conference, the special workshops, best traders, hedge funds, VCs, market makers, the people, professionals behind the space, who are really contributing. And it's free. It costs you zero. It costs you nothing. And you can just become a better trader in just a couple of days. You're going to get all the indicators, all the strategies, all the 24/7 guidance from me, from my team, all the courses, access, all the special webinars, all the workshops, like I said, all the broadcasts, special access to my private strategy in BPro, on the bootcamp special profitability program that we have. And, and the Trading Congress participation with the entire community. There's over 6,000 people already registered to that event. So that's a wild crowd. And all you have to do is just click on the join button, and it's going to take you to, it's just going to take you to, well, I actually bought it. So I'm bought it as an added it to my basket. It's free. Although I've already added it. So you're going to see it. Just have to put in, basically click on a join button. It's going to take you to our Discord, and just going to click on the button, and that's it. You're in. Don't have to do anything, and it's free. It doesn't cost you anything. It's basically, to many people, a game changer. And don't only take my word for it. There are actually lots of case studies. There are very many case studies that we did, that lots of people appreciated, from from the past, not because I say so, but because they found it very, very valuable. So all in all, like I said, there's a lot of good reasons to get excited about it. There's a lot of good reasons to, um, to take things, um, for the spin. Next couple of weeks are gonna be crazy. Next 6 to 9 months are gonna be special, super crazy. And for everybody who's in the space, like I say, uh, they're gonna have a measurable effect out of that. Tammy, I appreciate. I love the Trading Congress. Thank you so much, Tammy. Such a kind word from you. And just to show off, like I said, don't only take my word for it. Volter 2419 from the 2 years back. This is the sixth edition. I remind you, this is the sixth edition. Fully agree with an incredible group of motivated, warm-hearted, smart people. Work too much as well to take full advantage. Feel guilty. I cannot attend all the streams, webinars, but this is what it is and feels like home, right? So people feel like home. So, it feels like home to be winning actually, and it's free. It costs you nothing. If you want to stay, you're going to be able to extend for free for as long as you wish. And you're going to find the video description link. I'm going to insert a link for you. Otherwise, go ahead to check my pinned post on Twitter, or just go to thebourbonist.com, type it in, enjoy, hit the button, and you're in. And I'll see you actually there inside, everybody. I've been your host, Adrian Zdenchik, CMT Charter Market Technician. Rock on. And I'm going to come back when we hit 100K, which might be in a couple of minutes, might be a couple of moments.